Hello everyone and welcome back. In this video I will show you all the companies that I am monitoring for this week. We are at the middle of the earnings season. I hope everyone is surviving, and next week we will have a lot of companies that will report earnings. So in this video I want to walk you through all the companies that I will monitor, all the companies that I have in my portfolio, and what are the KPIs, what are the metrics I will follow. So in case you are a shareholder or maybe these stocks are in your watch list, you will have some things to do, some homework, some KPIs that are important, and the only things that matter, because not everything matters for stocks. You have to follow specific metrics that will drive stock prices. Okay, if you don't know what are the key KPIs for your stock, you are wasting your time on unnecessary things. So we will go through this list, plenty of companies, plenty of topics, and actually I'm quite surprised that all the companies I have in my portfolio reported pretty good earnings, and almost all the stocks I have in my portfolio went up. So this is only February, but I already outperformed the market by 2%. So pretty good, and let's see if this trend continues, if I can go through this earnings season with having only green stock prices. So be it. It's a good start of the year. This is the benefits of only owning quality companies, well, I guess. So yeah, we'll see how it goes. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. So my whole portfolio is designed to make 20% per year, 25% per year. So you will see that I own some stocks that will report earnings. So it will move a lot for me. I mean, my wealth will move immensely this week and also past week. So on Monday, what do we have? We have a couple of companies that nobody cares about, and you have a big company called Disney with a change in management, with some change in KPIs. Actually, Disney is a quality company when it comes to their moat, but business-wise, margins-wise, execution-wise, it's horrible. So I don't want to touch Disney, but I will monitor what is happening there, because their recreation parks are one of the most interesting inflation hedges we've had in the history of capitalism. This is how good they are. For Disney, I mean, if you had some clear execution and clear management teams with clear capital allocation decisions, I would love to be a shareholder. But it is not the case. They are just burning as much cash as possible because they want to burn cash, I guess. And they went completely broke because they went woke. Go woke, go broke. It was a complete failure to have Disney Plus. Complete failure with many movies right now. They killed some franchises with Marvel's movies, etc. I'm not a fan at all of how the company is developing. So I will monitor what is happening in the hopes of maybe being a shareholder in the future. But this is just a disastrous. For anyone buying Disney right now, you have my respects, but I'm not on your team. The next company I will follow before the market opens is Napco. Napco is a company I've had in the past and I sold. It's a good company in the security departments, so alarms, so cameras. You have a lot of red flags. The company was accused of being a fraud, but they are very profitable, and they went from selling hardware to now selling software, now being recurring business model, now having extraordinary margins. And I made some videos on my channel about Napco, if you want to check in 2025, I suppose. And I am no longer a shareholder, but I'm very well monitoring what is happening, because I think Napco has the elements to be a long-term compounder in the future. Now the market cap is really small, but out of all the small caps in the world, Napco is one of my favorites. The market cap should be like $1 billion, but they have the weapons to grow immensely when it comes to their revenue, their margin profile, their free cash flow. I I'm not a fan of their capital allocation decisions. Sometimes they are doing buybacks, the stock drops, and they stop the buyback. Or they have too much cash, so they issue a dividend, so they have to pay taxes on their dividends. I'm not a fan of how they think about rewarding shareholders, so it's not a perfect stock. At some point in 2025, it was extremely cheap, and now the stock has rebounded. Best case scenario for me, the report is excellent and the stock drops, so I can buy it. Because, I've been a shareholder, I was a shareholder in the past, I sold, but I want to get back in if you have a good price and a good buyback program, etc., etc. Also, you have an aging CEO, so should be around 80 years old. Not the best situation, if you want my opinion. You have somebody that is at the final part of his life and that has been selling shares to finance his life. So maybe in the future, I expect a change in the CEO. Maybe the new CEO will understand the benefits of doing buybacks. So maybe in the future, I don't know, in the next 5 years, if the CEO retires, in the next 5 years, you will have a new management team that will do huge buybacks for a recurring business model with extremely high margins in a niche business. We are talking about an exemplary stock analysis here, stock example here, and they don't have any debt. So maybe in the future, Napco is building the foundational ground to be a long-term compounder in the future. It's already a long-term compounder. You can check the stock price of Napco. It went up and to the right with a lot of volatility, but I think it has the potential to become very big in the future. We can go from a market cap of $1 billion to $10 billion really fast. You just need a little push, some execution, and some buybacks. I would love them to stop the dividends completely and just do buybacks when the stock is cheap. And they are not doing this. So, not perfect. I would love to see an improvement when it comes to the management team. Okay, these are the kind of things I will monitor for Napco. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. After the close on Monday, you have the company called Palantir that will report earnings. It will make a lot of very good YouTube videos for other YouTubers, but I am not following Palantir. I don't want to touch businesses with such amount of hype and high valuation, so I will just not monitor what is happening. Every time they monitored earnings, the earnings were exceptional, the revenue growth was exceptional, the management is extremely bullish for the future. Fair enough, but not for me. Apart from this, on Monday night you have nothing for me, nothing that I will monitor. Davita from a distance, Teradyne from a distance, but not really. Now on Tuesday is very interesting. You have PayPal, what people call pain pal, because the stock has done nothing for so many years now. You want to check what is happening with PayPal because people start to compare PayPal and Adobe, meaning a decelerating business model that is now ramping up buybacks. Maybe if PayPal is going up based on some momentum, some companies will follow, like Adobe. I would say it has a low probability of happening, but you never know. So I will monitor what is happening with PayPal if they reaccelerate revenue and how big their buyback program is. If they announce a huge buyback program, but I don't want to be an investor in PayPal. I don't like their business model. So that's it. Even if the numbers are good, I don't like using PayPal as a shareholder. I don't like looking at their business. I don't like analyzing PayPal, so I don't want to be a shareholder. It's that simple. Sometimes you have businesses that you love. Sometimes you have businesses that you don't like at all. So I don't want to be a shareholder of PayPal. I don't want to be part of this journey, so I'm out. After this, Merck, not important. PepsiCo, not important. It's even too high. ADM, not my kind of investing. Pfizer, something. Transdigm, very important. I will monitor what is happening for Transdigm. I think I've never talked about Transdigm on my YouTube channel. It's a quality company in a monopoly / duopoly. They are squeezing the juice out of their customers, increasing their prices, and at some point it becomes unethical to raise your prices so high. Because when you deal with engines, airplanes, and safety of customers, safety of people, there is no price too high. So Transdigm knows that really well, so they can just raise their prices as high as they want, and customers will pay them. I mean, it's a definition of pricing power. Financials are extremely good. Is this for Transdigm? I see India Design Center. Maybe this is a subsidiary. Anyway, you can check at home. But yeah, if Transdigm is reporting earnings, I will monitor it. In case that's a subsidiary, I will still monitor it, what is happening. Anyway, I'm hesitating towards if I want to be a shareholder of this kind of companies or not. But at some point, there will be a price too low. At some point, it can become very cheap to be invested in Transdigm. Transdigm, I never know how to pronounce this one. Don't insult me in the comment section below. But yeah, very good company if you want a hunting ground for monopolistic behaviors and immense pricing power. After the bell on Tuesday, I have AMD, which I am not following, Enphase, which I am not following, Chipotle, that I am monitoring. Since the change in management, you have a new CEO, Mr. Brian, I think it's Brian Nicol, changed the company and he went from Chipotle to Starbucks. Since then, the company is no longer the same. The efficiency-focused CEO is no longer here, so the company is not efficient. End of the story. So will they become efficient again? I don't know. I mean, I'm blanking on the name. Brian Nichols. Chipotle. And now he is working at Starbucks. Am I talking about the good person? I hope I am. Let me just double check live what I'm saying is true or not. So yes, he was the CEO of Chipotle between 2018 and 2024 and then went to Starbucks. Okay, fair enough. So yeah, this is the good one. After this, you have nothing really interesting for me on Tuesday night. You have Chubb. I was a shareholder of Chubb in the past, but it's an insurance company, and I don't want to be a shareholder of this anymore. And you have Tech2 Interactive. Okay, now I have a quick side story, because I'm following what is happening with the Tech2 Interactive, but from a distance. If you look at the financials of this company, Tech2 Interactive, they are bad. This is a gaming company. They have a very promising license, very profitable license called GTA. GTA 1, 2, 3, 4, 5, 6. So, and other things. GTA 6 is expected to be the most profitable game on earth. So you have a lot of potential for this stock. At the same time, they keep delaying the release date of this game. So you just wait and wait and wait and wait. At the same time, the stock dropped recently because Google announced that you could make any 3D world based on your computer almost for free. So you can create a new universe based on Middle Age, based on dinosaurs, and create your own custom game. So you have Unity software that dropped 30%. Unity is a company in the gaming ecosystem that is delivering these kind of games. And Tech2 Interactive stock that dropped meaningfully. What I want to try to say is, with the development of AI, there are some worries about gaming companies that maybe in the future, the barriers to entry to create a game will get lowered. So you will have new studios that will be able to make as good games as big companies like Tech2 Interactive. So maybe it will affect the moat of these gaming companies. Maybe. That's a question mark that just became true and came out of nowhere a couple of days ago. We did not have this new risk a couple of days ago. Well, you can take the second side of the story, the other side of the coin. which is now that anyone can create 3D universe and small games, maybe Take-Two Interactive can fire a lot of people, and instead of needing 10 people to make something, you can have one person doing the thing. So you can just fire a lot of staff and be as efficient. Or you can keep your high number of employees and deliver 10 times more games. So either it's extremely negative for all these gaming companies, or it is extremely positive. And it's a big question mark that all the SaaS companies are experiencing right now. Will AI help you become more efficient? Or will AI destroy you because it is lowering the barriers to entry? If you don't know how to answer this question, don't invest. If you have an edge and you kind of understand how this is happening, invest. It is as simple as this. You are not forced to invest in any SaaS company that is getting destroyed right now. The sentiment for software companies, software stocks is just horrible. If you don't know, just don't invest. Invest in PepsiCo if you want. I mean, if you want safety, that's fine. But maybe you will not have great returns if you invest in PepsiCo. Anyway, so that's it. I will monitor what is happening, but from a distance. On Wednesday, before the bell, you have Eli Lilly. So weight loss pills, Uber, Boston Scientifics, Novo Nordisk. Oh, it's quite funny actually that you have Eli Lilly and Novo Nordisk at the same time. And you have Uber. I'm not following these three companies. I don't like them. I don't like Uber, so I will not touch this one. I'm not a fan at all actually. I don't think the moat is quite big, quite wide, and I'm not a fan of how they became profitable. If you don't know what I'm talking about, please do some work. I will not do everything for you guys. Do some homework. But yeah, I don't believe in the sustainability of the profitability for Uber. I don't think the growth rate we've seen in the past few years, thanks to the great new CEO, will become big in the future. And I prefer other opportunities. I know that a lot of people are bullish Uber. I've received some comments about analyzing Uber. I will not analyze Uber. I don't want to. I did the work and I don't like what I see. And I know some big investors covering the stock. I know Bill Ackman is a great bull. I know some other YouTubers have done the work and they like the story. I just did the work and I did not like the story. That's fine. I hope the best for every one of these investors, because after all, it's a good company and everyone uses Uber, but I just don't want to be an investor. After this, for Eli Lilly, Novo Nordisk, what is really funny is you have a duopoly in this market and they both report earnings at the same time. So of course, people will always compare the two of them. Eli Lilly, Novo Nordisk, who has the best results, who is more profitable, who has the best market share when it comes to Ozempic, having pills to lose some weight. Of course, will you announce something big? Will you announce a new partnership? Will you announce a new M&A activity? What is really funny is Eli Lilly stock is up, Novo Nordisk stock is down. But these are almost the same companies. So it's all about sentiment and perception from the public. Novo Nordisk is in a very bad shape right now. They are still profitable, but the CEO was fired. The results they had from their pills were not as good as expected, but I think the business is still fine. If you want to be an investor in Novo Nordisk, I could totally understand people buying right now. This is a good value investing play if you know this industry. And for me, this industry is not inside my circle of competence at all, so I'm out. You see, for all these companies, I mentioned that these are not inside my circle of competence. In investing, you need to be a harsh grader and know yourself. Know whether you really understand the company or not. I know the gaming industry quite well, for example. I've been a video game player for almost 20 years now. So I know what is happening there. I know if this will have an impact or not. For other stuff like Ozempic, Eli Lilly, Novo Nordisk, no, not for me. So know yourself. Don't invest in a stock just because it's cheap and because the stock has gone down, right? Know if you really understand the business. You just have to ask questions. After this, before the bell, nothing quite big. I don't care about the rest. And after the bell, now we are talking. I am a shareholder of Google. It is my second largest position. It is 11% of my portfolio. So of course, if Google is having an immense earnings growth and the stock goes up, I will be happy. A few things I want to monitor for Alphabet. I want to monitor how YouTube is doing, how Google search is doing, how they plan to monetize Gemini with some potential ads. I want to see what they say about market share compared to ChatGPT. I want to see what they talk about, what they say about their capex in the future. And I want to see a specific line in the income statement called non-operating income. These are the equity gains they have because Alphabet is investing in private companies like SpaceX, like Anthropic. And as you all saw for the past few weeks, Anthropic and Claude are working really hard to change the world. So actually now they are moving faster than ever. And you have some AI agent opportunities that are happening right now with Claude and Anthropic. What if the value of Anthropic goes up because the company is moving really fast? If the company of Anthropic is moving up, the gains from Google that is invested in Anthropic will improve, will increase, more gains. And in the income statement, you will have a line, equity gains. So if Anthropic's value goes up, the earnings of Alphabet will go up. So the total bottom line of Alphabet will go up. And I want to be extremely careful when it comes to this because I want to remove these gains as if they never happened. I want to just remove this line and adjust the PE ratio, price to free cash flow, these kind of things. So I want to be careful about this line. And yeah, that's basically it. I don't expect major buybacks. I don't expect major dividend changes. I expect the business to grow as usual and maybe shock the world when it comes to Google Cloud or something like this. But yeah, you want to monitor what is happening. Broadly speaking, for Alphabet, they are focused on many things at the same time. After this, you have Snap, no, Align, no. I know some investors that sold Align very recently. They are operating in the dental equipment. Pretty good business, pretty profitable, and everything turned south in 2021 for Align. I almost bought Align a few years ago, and I think I never talked about this on YouTube. I never made a video about Align. I don't think so. Maybe I did, but I don't remember. It's a company that is very promising, but I did not get enough conviction to buy Align. Qualcomm, I'm not following the story. You have O'Reilly that is really interesting because they are operating in a duopoly with Autozone. Oh, well, not duopoly, but the two big boys of the industry are O'Reilly and Autozone. And I own Autozone. So if O'Reilly says something really bad about the industry, O'Reilly stock will go down and my Autozone will go down. So of course I want O'Reilly to have good results, say everything is working properly. Last time I checked, O'Reilly was famous for being focused on domestic market, on the US. And last quarter, they announced that suddenly they want to become more international. So very likely they announced that they will grow internationally. Here is our action plan. We plan to do this and this and this and this. I'm aware they have some stores abroad, but not many compared to AutoZone. So you had a key differentiation between O'Reilly and AutoZone, O'Reilly domestic, AutoZone international, O'Reilly growing more, and AutoZone doing a little bit more buybacks. Now it seems like they are merging the same buyback program and the same international exposure in the future. So really funny what is happening, but we are talking about very good, competent management teams. Okay, so I want to check the growth rate, the guidance, what they say about international exposure, the potential headwinds, and the inventory management, the working capital. These are the things that matter. I know they will do buybacks. I know they will maybe take on more debt, but that's fine. Apart from this, no. Wednesday is a big day for me. AutoZone, Alphabet, that will change my portfolio. After this, you have Thursday. Thursday, a few oil players, Estee Lauder. I'm following actually what is happening with Estee Lauder, how bad things have turned for this company. Very interesting, very entertaining. Only bad news coming from this company. I don't want to touch it even from a distance. And about this, nothing. Cigna is here, interesting, but no. On Thursday, you have maybe the most important company of the week, Amazon. Of course, I'm a shareholder of Amazon. It should be like 3% of my portfolio. Oh, by the way, let me mention the percentages. Alphabet, 11% of my portfolio. Autozone, 6-7% of my portfolio. Amazon, 3% of my portfolio. I'm giving you the numbers so you have a rough idea of the conviction I have towards each company. For Amazon, I want to sell the position. So best case scenario, they shock the world. Best case scenario, they also own some shares in Anthropic, so the value of Anthropic goes up and they have massive gains. Best case scenario, they announce a re-acceleration of AWS. Best case scenario, they announce something really bullish for their partnership with OpenAI. We learned a few days ago that Amazon invested $50 billion in OpenAI, ChatGPT. Maybe you have not been following this. This is extremely important because ChatGPT is about ChatGPT and all the AI agents are about to disrupt the browsing industry. If you want to shop for an item, you just ask Gemini, ChatGPT, Claude, and now they have access to your credit card. So they will buy the thing for you, and you will get the delivery in 1 day, 2 days at your home, at your house. Amazon was not part of the story, which means before, 1 week ago, 2 weeks ago, 1 year ago, if you wanted to buy something from ChatGPT and you say to ChatGPT agent, buy things for me, ChatGPT would go to the website of the company itself. Like imagine you want a lamp or a table. You go to the furniture store website, table, this price is okay, check the delivery address and you get received. You did not go through Amazon to shop. And actually, now, Amazon just invested $50 billion in OpenAI. It is viewed as a negative thing because people are short-term oriented, but I think it's a very positive thing that now Amazon has some power to interfere and have some power to ChatGPT. Now, maybe there is a deal between ChatGPT, OpenAI, and Amazon, saying if you want to buy an item, you can go to the furniture website, the real store, or you can go through Amazon. But now Amazon has something to say. They have money on the table, and maybe they will work their way up. And maybe you have some crazy partnerships to follow in the future, meaning Amazon can create a new partnership, a new deal with OpenAI and ChatGPT, and rank Amazon as the top position in the browsing market. Which means if you want to buy something on ChatGPT agent, you say ChatGPT, okay, I need a new table, mine is broken, this is this model, the price range is approximately this, figure things out, I just want to pay, this is my address, boom, do it now. ChatGPT agent will go to browsing the internet, will go to Amazon, will log into your Amazon Prime account, and boom, in one click, you have paid and you will receive your table tomorrow with Amazon Prime. This is it. Maybe now Amazon has some power to influence the browsing experience. And instead of going to the official website of the table company, you can go through Amazon. Before, 1 week ago, we did not have this. So finally, Amazon is playing in this AI agent thing to maybe integrate AI agents in the Amazon ecosystem. I would love the management team and Jesse to explain what is happening with their OpenAI deal. I've seen very few videos on YouTube talking about this, but the deal, the $50 billion deal, is extremely important for Amazon, and it is very, very bullish. I mean, if the management team is saying something very, very bullish during the call, you can expect the stock to go up 10% in 1 day. I mean, it's that bullish. It's extremely positive for Amazon if they say this. If they don't say anything, too bad. Too bad. So yeah, you want to check the overall margins. You want to check the AWS reacceleration. You want to check what they say with their OpenAI deal, $50 billion. You want to check what they say about maybe increasing the guidance. And you also want to check the fact that they closed some Whole Foods stores. I mean, they are closing out some brick and mortar branches in Amazon. Amazon is closing their brick and mortar segments, and they are focusing on high margin online segments, like their cloud segment, for example. So the overall margins of Amazon are about to go up, the operating margins, the net margins, which means you can now value Amazon on a PE ratio basis. Before, you had to value Amazon on a price to operating cash flow basis. It seems like now they have earnings, which is good. So you want to check what is happening here, if the margin profile is the same, and what are the margins for their segments. What are the margins for AWS? I think the market will be focused on AWS growth. What is the growth rate of the cloud segment? Maybe if you look at the highlights, it will be the main headline that will be it. If they reaccelerate massively, I suppose it will be the main headline. If they decelerate, it will be horrible for the stock price. Like minus 7%, 8%, horrible. By the way, I hope you like this format. Leave a like if you like this format. Just you and I chatting about how to prepare for this week. Iris, Energy, Roblox, MicroStrategy, Affirm, Reddit. I'm not following any of them. Atlassian is a software company that is hated right now. So always good to monitor what is happening for software companies. And then you have another company that I am following a lot called Fortinet in the cybersecurity industry. It is 10% of my portfolio, and I have a very high conviction on this stock. And the best case scenario Thursday is Amazon goes up immensely, I sell Amazon, and Fortinet goes down immensely, I buy more Fortinet. I sell Amazon to buy Fortinet. I called for this move 1 quarter ago, and 1 quarter ago this is exactly what happened. Amazon went up 10%, Fortinet went down 10%. So I sold Amazon, a little bit of Amazon, to buy more Fortinet. I'm calling for the same thing. I'm not calling, I'm hoping to see this. But now it seems like the Amazon report will be bullish. If I had to bet, I would not bet on Amazon going down on this earnings report. You have plenty of good things to say, especially what I just said for the OpenAI deal. So actually, I'm quite bullish for Amazon. Anyway, I hope the stock goes up for Amazon. For Fortinet, it's an interesting story because they have many worries right now. You have a cybersecurity company that is doing software. So like all the software companies, all the software stocks, they are going down and being doubted. At the same time, cybersecurity is improving and reaccelerating thanks to AI. So it's very good. But Fortinet is also doing some hardware, and the price of memory is skyrocketing. So the costs of Fortinet will skyrocket. So the margin profile will get a little bit decreased. Out of this, they had a recent article that was released about China banning cybersecurity providers. They want China to deal with Chinese cybersecurity companies, something I totally understand. So maybe it will have a negative impact if the management says something. What if they say, maybe we had 3% to 5% of our sales in China, so expect a bad guidance. We are lowering the guidance for 2026. Wall Street will not like it at all. So you want to check what they say about the software growth rate, the hardware growth rate, the margin profile and the cost of memory, the AI implementation for FortiAI, FortiSASE, all these SecOps, all these things. And also you want to check their buyback program. Last quarter, the stock dropped and Fortinet did their biggest buyback program ever. And I believe now, in 3 days, on Thursday, they can make their second biggest buyback ever. because they are still net cash. They have dry powder, and the stock has not moved much for the past 3 months. So they can use this net cash for doing massive buybacks. And last quarter, the company bought back 3% of their shares. And I think they can continue to buy back 3% of their shares. So a buyback yield of 6%, life is good. I would love for them to be resilient, show Wall Street and show the world that they're in a fine position, don't change the guidance, and make a huge buyback program. I would love to be in this position. If they say this, the stock price will go up, and I'm happy because this is already 10% of my portfolio. If they say this and the stock drops, it will drop to, even if the stock drops 20%, it will grow from a 10% allocation to 8% allocation. I'm happy to buy more, go back to 10% position, because I have a lot of confidence, a lot of conviction in Fortinet. I want to be invested in cybersecurity, especially as the world is getting into more AI. Now I already talked about cloud, maybe cloud bot. Now you have some AI integration within your computer. People are giving access to their computer. People are letting AI as a Trojan horse to operate in their network, to send messages on their behalf, to reply to messages, to send mails on their behalf. People are doing open books, are opening their laptops to AI without taking into account the risks. I've seen plenty of videos about this topic. People are highlighting the risks, but people still do it without cybersecurity defense for the moment. So I think the cybersecurity industry is one of my favorite industries to follow for the coming decade. And I want to be here. I want to be part of the journey. I want to be in this industry. I think everything will accelerate. You have plenty of potential. You can invest in CrowdStrike, Palo Alto Networks, Zscaler, Fortinet. Choose your fighter. I'm choosing Fortinet because it's deadly profitable and you have a lot of insider ownership and they love buybacks. So you have a growing industry that is the future and a management team that is focused on shareholders, margin profile, buybacks. Fortinet is the intersection of these two aspects, and I love it. I think Fortinet has the potential to make 20% per year in the future. So I want it to be a core holding in my portfolio. I hope my point was clear. So yes, Thursday is a huge day for me, for my portfolio. Either I'm making a lot of money or I'm losing a lot of money, but if I lose a lot of money because of Fortinet, I will buy the dip. I'm telling you, if all the metrics are in line, the business is fine, but Wall Street is panicked, I will buy the dip. And if the stock goes up immensely, so be it. I'm already a shareholder. This is a big part of my portfolio, okay? And then on Friday, nothing really earth-moving, nothing. I'm following nothing. Nothing is important here. So these were all the companies that I'm monitoring for this week. Good luck to everyone. May the gods of investing be with you. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.